we go. So should see the slides coming through. Can you just give me a thumbs up, Ian, if you can see the slides? All good. Indeed. Excellent. So welcome to today's presentation, a joint one between the Money and Pension Service, Money Helper, and Bradford Credit Union. So Richard and myself will be taking the first section, talking for maybe 40 minutes or so on the pensions, and then Ian's going to take over, have a bit of a chat about BDCU. So I'm a pension specialist at Money Helper. Richard and myself, as I say, we're from the pensions team. Money Helper is a huge, broad organisation with lots of services, and we'll come on to that in a sec. Now, as Ian just mentioned, but if you could keep your microphones off and cameras off during the presentation, it avoids distracting everybody. So thank you for that. If there's any questions, please use the chat function. We'll do our best to get to them during the talk. And of course, there's ways to get in touch with us afterwards as well. So if we don't get to your question, or you don't want to go into detail in a more public forum, then how to reach us later. If you do use that chat function, please don't put particular personal details in there. I have seen in the past people putting national insurance numbers and mother's maiden name and all sorts, so please don't do that. Now, after the presentation, we'll send around a copy of the slides, a PDF version. It'll have hot links, so the underlined text, typically like Money Helper privacy notice here, will take you direct to the page it's referring to. And we'll also send, or Ian will send out a recording shortly after the presention as well. Now, by attending,
just to clarify on that,
sure.
It'll be a week. Allow us a week to get that organised. We're going to do a blog with those interactives.
Brilliant, excellent. And of course, by continuing to attend, you are giving your consent to that recording. Now, if you're at all concerned about what we do with your data, and we really don't misuse it, then you could read our privacy notice, and there's one of those hot links I mentioned earlier. And do please bear in mind that everything we're sharing today is accurate to the best of our knowledge. Oh, if you could mute, please, whoever that is. Just saying, be aware everything we speak about today, it'll be up to date as far as we know, but do please always double check before making any decisions. So legislation does change from time to time. Okay, so a bit on Money Helper. So it's a broad organisation, it's government backed, we're impartial, independent, and we help people in all sorts of ways. You'll notice there's a bit of an overlap with the BDCU brief as well. So we help people with debt, organising how to find or organising debt advice clinics, talking about major life events, bereavement and such in general terms, but also, of course, with savings and pensions. And it's the pensions team that Richard and I are part of. So we provide free, impartial information and guidance. Now, crucially, we don't do advice. We don't provide advice. So we can explain what you can do, but we won't tell you what you should do. So you could do that. We can say, but we'd never go as far as saying, oh, this is what you should do. That's regulated financial advice. If you need that sort of help, then you'd need to find a regulated financial advisor, and there's help to do that on our website. There's another of those hot links, and also a link to get legal help if you need a solicitor or similar. Okay, so what we're going to try and do today, excuse me, is quickly have a quick word about thinking about retirement, what income you might need, some of the tools on our website to help you plan for that, outline quickly how the state pension works and other types of pensions, workplace and private, to help augment your state pension. We'll talk about the options and how we can help you make an informed decision, and things also to think about: tracking down old pensions. Very easy to lose track of a little pension from a few years ago with a different employer, say, and also crucially, pension scams. Pensions are often very valuable resources. People find them a bit confusing, and that means it's a fertile ground for the scammers, unfortunately. So in the interest of time, we won't do this interactively, but just thinking about how much you're living on now and what you might need in retirement. Now, income in retirement is going to vary depending on personal circumstances. Crucially, and I'd stress this, these figures I'm about to share don't include rent, mortgage, or social care. And they're also spending power. So we're talking about money you could actually spend. So it's after tax. So bear in mind, all those extras, if you're still renting in retirement, could make a huge difference to what you need. Now, these figures are drawn from the Retirement Living Standards, which is the result of a big survey done by a trade body now called Pensions UK. They did a lot of research to classify the income needs that pensioners talked about in retirement at 3 levels. So the first is pretty basic, so it's covering food and living costs and a little bit left over. And their research suggested that outside London, a single person, single household would need 13,900. And remember, that's after rent, after mortgage costs, and after tax. So the income you'd need to give that spending power would actually be a little bit higher. For a couple inside London, of course, higher costs in London, then spending would need to be 24,100, they reckoned. Now, if you want to see a bit of detail as what's behind those figures, there's assumptions about holidays, about spending power at the supermarket and so on, then follow that link to the Retirement Living Standards. Now, you might think some of these figures are a bit, whoa, that's a lot, that's more than I'm earning now. Well, of course, you can go to that standards, have a look at what they've got in and see how you might disagree with it. So, just to tweak it, but it gives you a starter for 10 on a bit of an aspirational target, perhaps. So you can see moderate level, you'd need, very, very round figures, double what's in the minimal pack and a bit more to be comfortable. More foreign holidays and such like. Okay, I'm not going to dwell any further on that. We have got some budgeting tools. I know BDCU's got them as well. So you could have a look both at budgeting now and what you might need in retirement. A lot of people haven't given any thought at all, but really worthwhile doing just to have an idea where you might be aiming for. So having thought about what you might aim for with the living standards and the budget planner, the next thing to do is think about what you've already got. Again, if you're not speaking, if you could bung yourself on mute, that would be helpful. Thank you. So we have got a tool, again, underlined, hot linked to the pension calculator to help summarize what you've already got. So thinking about your perhaps state pension entitlement, a workplace pension, a private pension maybe, sort of just bringing those sums together to give you an idea of how close you are to your aspiration. And there's also some support in that tool to think about, well, if I put a bit more in, what might I do to my retirement income? There's also a tool on our website to help try and identify different types of pension. As Richard will go on to talk about, different types have different options. And I think a really useful tool, I've used it myself, is the Money Midlife MOT. Now, it's a pretty simple thing, no real difficult, challenging questions. There's about a dozen questions, things like, have you got a will? Have you thought about what would happen if you were ill and couldn't work for a period? Those sort of things, just to prompt you to look at your overall financial wellness and improve your general financial situation. And there's a full list of all the tools under that button. So there's lots on the website, as I mentioned earlier on, very broad church on what we cover. So state pension, again, often the bedrock of people's retirement incomes. So this is paid in addition to anything else. You can defer it. You don't have to claim the state pension. Whoops, sorry, clicked on accidentally. So the current level of the new state pension is £241.30 a week. So that works out to be a little over £12,500 a year. Now, the eagle-eyed will remember that on that slide I just showed you, the retirement living standards was suggesting 13,400 as the minimum for a single person outside London. So the state pension is a good way towards that, but doesn't quite get you there. Now, to get the maximum new state pension, you need to have at least 35 years national insurance qualifying years. That can be from a combination of work. Some benefits will get you a credit for national insurance, so it still helps build your state pension entitlement. And it may be appropriate in some cases to pay voluntary contributions. What I'd say to people is it's always worth looking at your forecast, seeing if you're on track, and if there is some things you can do, possibly thinking about voluntary contributions. But voluntary contributions aren't right for everybody. You don't have to have 35 years in a solid block, by the way, as long as you've got those 35 plus years through your working life. So do follow those links afterwards and have a, check your state pension age. That's gradually been going up. It's about 66 and a half at the moment. It's gradually creeping up. At the moment, it will stop at 67, but it has been proposed it would go up a bit further to 68. That's reviewed every few years. People will get at least 10 years notice of any further changes. Forecasting and thinking when you do get to that age, what you have to do on claiming the state pension. And as I mentioned, voluntary contributions may be available, but they're not always in your best interests. So in addition to the state pension, as we said, then it might be helpful to have some other resources in retirement. And this is where workplace and private pensions can come in. Crucially, the state pension can't be claimed early. So if you wanted to retire before your state pension age, then a workplace or a private pension can help you do that, because they can normally be accessed at the moment from 55, but that minimum pension age is going to go up to 57 in 2028. Now, some schemes, there's always exceptions in pensions. Some schemes might still retain the 55, but most will be going to 57. And if you got seriously ill, you could also take the money earlier. You do have to be pretty poorly to do that. Now, one of the key features of pensions is that you get tax relief on your contributions. So the government effectively tops up what you put in. So rather than being paid, say, £80 after tax, if that was paid into the pension, if you're a 20% taxpayer, the scheme would often claim £20, or it would there's a couple of ways to do the tax relief, but with a private pension, if you paid in £80, then the scheme would claim 20. So it ends up with £100, but it's only cost you 80. And if it's using salary sacrifice, it cost you even less, because you'd also save on some national insurance. Now, most employees in the UK will automatically get enrolled into a workplace pension, and the employer has to pay in as well. It's also possible, if you're a low earner with a particular employer, they might not need to automatically put you in, but you can opt to do so. And if you earn over 6,240 a year or equivalent with that employer, they also have to contribute. So it's a really useful way of getting some extra money basically into your pension at no cost to you. And when it comes to retirement, then you can normally take 25%, a quarter of the benefits tax-free. So with the pension, you get that tax relief going in, all the investment growth is tax-free, and a quarter of it is tax-free coming out. There's no other savings arrangement which provides that tax pattern. So if somebody is a higher rate payer getting full tax relief going in, then they might only be a 20% payer when they're taking the pension. So there can be a particular tax advantage to using your pensions. Okay, I'm handing over to Richard at this point. Anything you wanted to just correct me on, or add anything to what I've said, Richard?
No, perfect, 100% accurate as normal, Martin. So
Right.
I'll take on from here. So everyone, my name's Richard. I'm one of the pension specialists as well. So there are two main types of pensions. There's what's called defined benefit. The way these work is they provide a guaranteed income for life. They're mostly offered by public sector jobs nowadays. It's very infrequent that a private sector company would have a current scheme in place. For those of you that work for Bradford City Council or some of the other councils that might be attending today, there's a relatively good chance that you'll be in the local government pension scheme, which is a type of defined benefit pension. The way these types of schemes work, all the risk is taken on by the employer, and there's no fees paid by the employee. They, as I mentioned earlier, will provide you with a guaranteed income for life. The other main type of pension is what's called a defined contribution pension. These are the types of pensions that you'll likely have if you set one up privately, or if you work for a private sector company nowadays. The way these types of pensions work, there's a pot of money that's invested, and the money in the pension can change over time, just depending on that investment performance. The investment risk is taken on by the employee, so they're responsible for how the money's invested and the retirement income that they're likely to get when they retire. They're not guaranteed, so what you get really is depends on how the investment performs, and there are usually fees that are taken from the policy, and they can vary between different pension providers and different pension plans. In terms of when you access this type of pension, they tend to be more flexible around how to take the type of pension. And with both types of pensions, currently the minimum age you can access is 55. However, that's going up to 57 in 2028. In terms of the options for accessing pensions, so to access a defined benefit pension, you'll be given a choice of taking a full guaranteed pension and no lump sum, or you can usually give up some pension in exchange for a tax-free lump sum. The lump sum's tax-free, and the pension will usually increase either with inflation or by a fixed amount. With some older pension plans, the lump sum and pension can be fixed, and you might not be able to change them, just to make you aware. And with this type of scheme, if the policy holder or the pension holder was to pass away, they'll usually be either a partner benefit or spousal benefit. It's worth just double checking with the scheme exactly what that is that they'll receive for their lifetime. When it comes to defined contribution pensions, the options for accessing these are a bit more flexible. I'll just cover them off quite briefly, just in the interest of time, but there's really kind of 6 main options with this type of pension. You can retire later or delay taking your pension pot, so you don't necessarily have to take it just because you've reached 55 or the scheme's retirement or the retirement age you set. You can get a guaranteed retirement income. Another word for that is an annuity. With this type of option, you'll be allowed to take up to 25% of the pot as a tax-free lump sum, and then the remaining amount would be used to buy an annuity, and that provides a guaranteed taxable income for either the rest of your life, or you can look at a fixed term annuity that pays for a fixed number of years. There's also the option to get a flexible retirement income. That's called pension drawdown. With that option, again, you're allowed to take up to 25% of the pot as a tax-free lump sum at the outset, and then the remaining amount would be invested in a pension drawdown plan, and then you would have flexible access to that. So you could either take ad hoc sums to suit your needs, or a regular income, or you could just leave the money in there and not touch it if you wanted to. There's also the option to take your pension as a number of lump sums. If you do that, the way it works is 25% of each individual lump sum you take out will be tax-free, and 75% would be taxable. So if you were to take out £4,000 from this type of scheme that way, 1,000 would be tax-free and 3,000 would be taxable, so would be added to any other income you received in the tax year. With defined contribution schemes as well, another option is to take the pension in one go. Again, 25% would be tax-free and 75% would be taxable. So it's particularly important, if you are going for that option, to consider the tax situation, because if you take a larger amount, you might find you get bumped up into high rate tax and beyond. And then there's the option with pensions to mix your options. So you may be able to do different things if you've got different pots. Also, if you have one pot, sometimes providers will allow you to split that pot and do different things, or you can do different things to suit your needs during retirement. So for example, pension drawdown at the beginning to get a flexible income, and then you might be able to use that money to buy an annuity to get a guaranteed income. So these types of schemes are very flexible generally. It can be a bit confusing for people when they come to their retirement. So the good news is there is support available. If you have a defined contribution pension, Money Helper offers a free service called Pension Wise to help people understand their options. It's for anyone over 50 with a defined contribution pension, and you get a full hour with a pension specialist where you can discuss your plans for retirement and just help you make an informed decision about your options with the pension. To book this, you could either dial the number on screen there, or if you click on that link when you get the presentation, that will take you through to part of our website where you can book an appointment online. And during the appointment, you'll get clear guidance on your options for taking your pension money, how each option is taxed, next steps to take, and just that sort of questions to ask your employer as well. A really important thing, I think this was asked in the chat actually, about a really important thing, and with pensions is to consider whether there are any lost pensions or any you might have lost touch with. I think it's estimated that there are 3.3 million lost pension pots, and it amounts to about 31.1 billion pounds worth of lost assets that people have lost touch with. Money Helper is currently working alongside government to produce the nation's first pension dashboard, and this will allow people to see all their pension information online, all in one place, and just really help people locate things and help them better plan for retirement. That's not been launched yet. However, testing is underway at the moment, and if anyone is interested in early access to the new service, you can look at signing up for our dashboard research panel. In the meantime, there are other options for tracing lost pensions. You don't necessarily have to click on adverts or pay someone to trace them. There's a service called the Pension Tracing Service. What you do with them, you'd give them a call or you'd go online, you'd provide details for the employer you might have worked for, and when you work for them, and you'll get contact details for who manages that scheme now. So that's a good way to locate a pension if you feel you might have had one with an old employer in the past. If you do locate a pension, you can either leave the pensions where they are, or you could consider transferring to a different pension scheme or one of your current pension schemes if you want. There's some links there below on the presentation about pension transferring and consolidation, as well as tracing pensions. From 2012, auto enrollment of pension schemes was rolled out, and it was rolled out to most employers or all employers by 2018. So it's possible before those dates, just depending on the employer, they might not necessarily have had a scheme running at that time. Really important thing with pensions is to consider the issue over pension scams. It's a really big issue that we come across, and it's a really sad thing if you've worked hard, to build up pension savings, and someone either tries to scam you out of that money. So just a few things really to consider. When it comes to pensions, just be really diligent if you're contacted out the blue, whether that's social media, website pop-up, adverts, text, email, post, or phone, any of those methods. You might be offered things like free pension reviews, upfront cash incentives, one-off investments, legal loopholes, or government initiatives. Our guidance would be to ignore all unexpected contact about your pension. Even if somebody seems friendly or professional or knows something about you. The government's actually banned cold calling about pensions. So if you do get a cold call, you can report the firm to the Information Commissioner's Office. But even things like a slick website or glossy marketing material wouldn't necessarily mean a firm is safe to deal with, even if it looks very genuine. And you can check if the firm you're dealing with is genuine by contacting the Financial Conduct Authority before giving any personal information away. And we've got some links there if you wanted to do that. We've also got some links on how to spot and avoid a pension scam. But just in general, we would say take your time. Never be rushed into making a decision. Scammers sometimes will say offers will be time limited or pressurize you into making quick decisions. They may even tell you your things your money will be safer if you moved it or cashed it in. Our general guidance is if it looks too good to be true, probably is. And if somebody's telling you can access your pension before 55, then there's a very good chance that it's a scam, because generally for most people, that's not going to be an option, except for in a few specific circumstances. In terms of the sorts of things you might want to consider at the moment in terms of planning for your future with your pension, you can make sure you're making the most of your pension savings. A good place to start is possibly with your current employer. Some employers will match contributions if you make those contributions, and sometimes they'll allow you to increase them, and they'll match those increased contributions with you. Also a good idea to just get all your information together on pensions that you have. Have a think about, have you lost touch of any pensions? Consider, are your pensions defined contribution or defined benefit pension types? Do you or have you filled in nomination forms so the schemes know who to pay the money to if you were to pass away? You can also get a state pension forecast as well. That's because the state pension is likely to be a big part of a lot of people's retirement income. And a very good tool to use is our pension calculator on our website. This will give you an idea of what your pensions might be able to provide you in retirement, and give you an idea whether you're on track or whether you might have to increase your contributions, those sorts of things. It's a really good tool to help you with your planning. In terms of how we can help, our pension guidance helpline is available on that one number that you can see there. If you just press 1, you'll come through to the pensions team. We've got the pension wise appointments that will give guidance on accessing pensions for anyone with a defined contribution pension who's over 50. But that pension number there, that can help anyone with any type of pension. So please do give that a call if you've got any pension questions. You can also see there's a range of other support, including managing money, scams, debt, insurance as well, if you're needing help in that area. And we also offer divorce appointments. Pensions can be quite confusing for people, if they are going through a divorce. So the idea of those types of appointments is just to give people an understanding of how it works in those sorts of situations. And then our Money Helper money guidance service offers a really broad range of support, and you can see a few of the different areas there, including budgeting, benefits, renting, mortgages, all those sorts of areas. So if anyone feels that they're struggling financially, I very much recommend giving a call and seeing what we might be able to help with. So yeah, that was a fairly sort of quick overview of the kind of pensions, how they work, and I hope that provided some useful information there. I think we're going to have questions, but I'm not sure we're handing over to Ian first for his part and want to cover questions after that, or do we have time for questions now?
I think hand over to Ian and then come back if we have time.
Okay.
We'll see what we do on that.
Okay, well I'll stop sharing and I'll just hand over to you, Ian, and then if we've got questions at the end, then we can cover them off then.
Wonderful. Excellent. Now let's bring mine up on screen. And here we go. So just checking, Martin, is that working for you?
Yep, I can see your slides.
Fantastic, excellent. So thank you very much for joining us. The majority of you are from our payroll companies. I'll go through exactly what our payroll companies are and why you've been invited along to this, but also what the credit union is. So, for example, I've seen Schofield Sweeney, our new company that's been joining us, as well as Bradford Council, Kirklees Council, and many of our other partners that we have. Thank you very much for joining us, and hopefully this will give you an idea as to what credit union is and why it's a great way to save with us. Okay, something we're really proud of is that we won Lender of the Year for the Yorkshire Financial Awards 2025. Something we're extremely proud about because we're up against HSBC, NatWest and Nationwide for this award. And the reason why we won this award we'll come on to later, but you'll see how we work with the community and how that actually works in principle. So my name's Ian Brewer. I'm the EDI Community Development Lead for Bradford Credit Union. We've rebranded as BDCU just recently because we cover now Kirklees and Craven District as well. My background's international community development in places like India, Nepal and Bangladesh, and also worked in South Africa for a period of time as well. From that, I've come back to the UK. I've worked in community centres, but also with HSBC Bank, both in net worth in Premier Banking, launched the basic bank account, and did other various jobs in the banking industry until 2009. I jumped out of that, went to work for In Communities before I got this job in 2016. Yanka Bakova is my graduate apprentice who does our marketing with us. So why are we so different from banks? Well, it's how we were started to begin with. And if we take all the way back to 1993, staff at Bradford Council were struggling to get loans from their banks during the credit crunch of the early 90s. They were talking to HR. HR decided to set up a credit union. And all a credit union is a regulated place for people to save all their money, and they can borrow out of that pot. So staff started to save into the credit union, and then we were able to start making loans from that. 2005, when the housing stock was transferred to In Communities in Bradford, people then wanted to have that In Communities, so they became a payroll partner, and we became district wide. Two things happened in 2016 that was a game changer. The first was that we were one of the first to adopt online banking, and now we have a smartphone app, so people can check their balance and move their money out of the credit union into their current account. And that's how 97% of our people make their withdrawals these days. Also, the council decided they wanted a financial inclusion officer back at the time. That was my role, and I applied for the job. And I said at the time that I didn't know a lot about credit unions, but I knew about community development. And so given this job, I would be able to create us into a community development hub that did savings and loans. At that time, we were just 3,000 members. Well, I'm happy to say that we're nearly 12,000 members now. Over 5,000 of our people are financially excluded people, couldn't get a loan anywhere else, couldn't get a bank account anywhere else. And we provide faith-friendly savings because we are a cooperative. We don't pay interest on savings, we pay a dividend, and a dividend is paid at the end of the year, provided we've made a profit, and we provide that profit back to members. Now, I'm wondering if I was to ask you how much 12,000 people in places like Kirklees and Bradford and Craven might save together, I wonder what figure you might put on that. And most people guess when I ask that question between 100,000 and £1 million. Well, I'm really glad you're sitting down today because we look after a staggering £6.5 million for 12,000 people in an area of high deprivation. Something we're extremely proud of, and that is being recognised by the Bank of England as one of the highest savings in an area of deprivation. We work with some of our key partners. Money Helper, as part of MAPS, has been speaking to you today. We also work with gambling awareness organisations like NECA, that's in Harrogate. We work with mental health charities such as Mind in Bradford, and we work with the Stop Loan Shark team. And in fact, we've been able to help bring a loan shark to justice just recently from intel we got from a member, and able to bring a loan shark to justice. People think that loan sharks aren't big, but they certainly are. How do we get people saving? We get people saving through our workforce payroll savings, first and foremost. And this is my big appeal to everybody of one of our payroll companies that's on here today, is that this helps us to do the work in the community. The barriers for people in work are well known. 1 in 4 staff have major money worries. 1 in 8 staff live in poverty, unknown to employers. 82% have turned to a high cost credit as the credit crunch has hit. The alarming rise of loan shark use with employed people has been reported, and this leads to low credit score because as people found their mortgages going up, the cost of living going up, they've missed payments, their credit score's gone down, and that causes a problem for there. But also, then solutions come through the credit union. So financial well-being, improved performance. We have over 4,000 staff that save and borrow at 34 companies, something we're very proud of. Those staff save nearly £4 million and borrow £2.5 million. Now, all our loans, unlike banks or building societies, automatically build credit scores. We send positive data back to Experian and TransUnion and other companies for that. Every month. So for everybody who has a loan with us, we send that positive data that builds credit scores for that. But most importantly, the savings that you save with us through saving through payroll is what we use to lend to the people in the community. Now, after the banking crisis of 2009, a certain amount of our money needs to be put aside where we can't use that money. So for every £10 somebody new borrows, releases £10 at the bottom, and that releases more money for us to be able to lend out to the community. And you'd be quite amazed to think that we're actually lending over £260,000 a month at the moment, with our loans starting at 7.9% APR for up to £25,000. One of the things I deliver is a Money SOS workshop, and my colleague Melanie Bishop, who's on here from Bradford University, and many others that have done this workshop with them. So I've delivered this to over 1,000 people now. It's a free of charge workshop, but I use my banking background to just go over the basics of what money is. It's the mechanics of money, as we call it. So what is an APR? What is a payday high cost lender? The dangers of loan sharks, how contactless works, which contactless, it was brought in to help people to lose track of their money, because that boosts banks' overdrafts. Banks make more money off overdrafts than they do off personal loans and credit cards. And how to improve your credit score and what credit union offers. Let's just quickly go back to APR for a moment. Your average loan bank lends between 6 and 20% based on your credit rating. Would you be surprised to know that the unofficial records are that about 60% cannot get loans from their banks because they have not got a credit score high enough to do so? So these are people on our estates, people living in poverty. They can't get loans from their banks. They've got to go somewhere else. One of the cheapest options is a doorstep lender that starts at 272% APR. Putting that into context, for just £500 over just 1 year, that's £410 of interest. That's a £910 loan for just £500 over just 1 year. And that's what a lot of people in the community are facing. And that's why it's so important that the work of the credit union that we do is promoted. We also have different funding streams that help us to do that community development. And one of those is our 250 microloan scheme. I'll just go on to that one there, which is this one here. We've just released the back to school loan. The back to school loan came to us from Tracy Braben, sitting down with Tracy Braben's office, and she was asking what happens to people that can't get credit from a credit union, because we were only legally allowed to lend to a certain credit score. If they fall below that, we can't lend to them because we're putting members' money at risk. So she came up with a pilot that would enable us to have funding to put towards helping people get a £250 loan, of which they would get £10 for opening the account and £40 at the end. These were people with shockingly low credit scores. We modeled that 60% would not pay back their loan, and it only turned out to be 27%. That means 200 people of the 300 people pilot did increase their credit score, and we've just been given another £300,000 over 3 years to help people be able to build their credit score again. So we've released that in our back to school loan, which is now widely circulating at the moment. And let's go back to here, and The other one of our flagship projects is Food Savers. If anybody knows Julie Thompson and the In Churches outfit that set up in Darley Street, this is a program that began in Bradford with funding from Bradford Council, where we decided to help people save in the community. We did that by helping people have a pantry experience. So they come in, they choose the food that they want, they put that into a bag worth usually £30, and they pay £6 for it, and £1 goes into the credit union. What's been remarkable is these people have brought down the cash that's under their mattresses out of their shoe boxes, and they brought that down to the credit union as well. So that in 2.5 years later, we've got 24 pantries across Bradford. We've got 1,000 savers, and those savers have saved over £80,000. These people have never saved in their lives and in areas of poverty. So that's another one of our flagship projects. For people in Kirklees, you're not alone, because we do work with Dalton together. Dalton and Ashbrow are two of the areas that are most deprived in Kirklees area. So we've been part of a £400,000 lottery bid, working with people there at the Chestnut Centre and local services to you to do financial education program, the Money SOS, and being able to work with that. So that's work that we're doing right now. So back to school one there. So just recapping on the benefits of BDCU. You can start a savings habit from your wage without missing it. And the majority of the companies that are on here today, Bradford Council, Kirklees Council, Sovereign Health, Schofield Sweeney, or these companies here, you're able to save through your company from that. So it's deducted at source, put into the credit union, and then you can access it as when you like. But it's a great way of building up those savings. The internet and smartphone banking, same day withdrawals to your bank. In the accessible loans that help you build your credit score. We have other projects like the Christmas Savers, the Junior Savers, as well as our faith-friendly halal savings.
Thank you back to France, Evian, where we know
just
that
put yourself on mute,
President
please.
Zelensky of Ukraine has been meeting
Put
with
yourself
Donald
on
Trump.
mute, please.
These pictures have been released just showing that meeting as well.
Sorry, if we can find a person and put them on mute, thank you. And our Money SOS workshops, as well as our regular newsletter and loan staff. If people do want to join, I really hope that if you are part of one of our schemes that you would. If you could go to our website, www.bdcu.co.uk, hit the join button, have your passport or driver's license with you, and a debit card, and your first £5 is taken as a deposit, but it proves where your address is. So with your passport, driving license, and your debit card, you can sign up and just put your payroll number in for that when it's asked for, the company that you work for, and then we're able to set up your payroll savings. And that is the end of that. And I will stop sharing for a moment and stop presenting. I hope that that gives people an idea about what the credit union is, and I think people are generally surprised about what the community development work that we do that keeps money local. Excellent. I will hand back to Martin and Richard. If there's any further questions, we can have a panel. Thanks, Adele.
That's great. I think we dealt with all the questions that came in the
Thank you,
chat.
Tom.
I'd echo Tom's thoughts. I think the work that credit unions in general and BDCU do in particular is outstanding. So well done. We have got a few minutes. I've put a feedback form in the chat, and I'll ask Ian to share that when the slides and the recording get available as well. It helps us improve. So, let me have it in the neck. It's fine. I can take it, but we can do better next time. If there are any issues or conversely, if there were bits you found particularly helpful, all good grist to the mill. So I mean, themes that cropped up were, I think in the chat, were tracking down old pensions. That's a huge issue. The dashboard is going to be a game changer on that. So due to launch in maybe 18 months or so. No firm date has been set yet. Okay, so we've had a couple more come into the chat. Okay, so would I need to make an appointment to see someone at, I take it that's West Yorkshire Pension Fund, to check my statement and go through with it? I wouldn't know if West Yorkshire Pension Fund offer that kind of service. Where Money Helper can come in, we can't talk through in super fine detail on any scheme because we're not the scheme administrators, but we can certainly help to try and explain what it's saying. But for definitive assistance to check it's correct or the pay makes sense or whatever, that would be the scheme you'd need to approach. And I think there's one about BDCU, which I'll leave for you, Ian.
Excellent. Let's just read what that is. The bottom here.
Oh, it's just sorry, I've just read it.
Oh, right, okay.
Yeah, it's a
thank
round
you,
of applause for
Melanie.
Melanie.
I really appreciate that, Melanie. Yep, I really do appreciate that.
I saw BDCU and went, oh, Ian. But yeah.
Could I extra? That'll be for you guys.
Yeah. Yeah, so gosh, that's one of the most common questions we get, and it's a very short question. How much can I put into my pension? It can be a very long answer. There are several limits which might apply. Actually, you can put in what you like. The limits affect the tax relief that you get, and a crucial one is it's not the only limit, but a crucial one is your what's called relevant earnings, which is usually your gross income from employment or self-employment. So if you have a windfall, you've sold some investments, granny's died or something, and you've got a windfall, then you can't just put any amount into a pension and get the tax relief. So these limits do apply. Beyond that, the one that often gets quoted in the popular press is annual allowance at 60,000 a year, but that's irrelevant for most people because it's the earned income that's often the binding limit. As to can you do it? Well, some schemes will let you. If it's a defined benefit scheme, they might not. They'll have their rule on what you've got to contribute. You might not have the option of putting in extra. If it's a defined contribution scheme, again, there might be rules limiting what you can put in to that scheme, if it's depending on what's happened in the past. But generally speaking, you can pay into the defined contribution schemes. The limits come in to the tax relief. As to how much you should do, well, that's either advice, but there's those tools we mentioned, on in particular the pension calculator, and there'll be often tools on a scheme's website to help you look at the effect of a little bit extra. Because if you're looking at putting a little bit extra in over time, and pensions are long-term investments, it can have a huge effect later on. So your older self will thank you.
What about AVCs, Martin?
Yeah, so AVCs, there's where there's a defined benefit scheme, this is often offered. So additional voluntary contributions, there's two sorts. Some schemes will let you pay additional contributions to buy extra guaranteed pension. Others will keep it as a pot, so defined contribution type pot within the wider scheme. That's quite interesting because that can then give you a way of using the pot to fund the tax-free cash you're going to take from the pot first. So effectively, you get that pot tax-free as part of the 25% tax-free cash, and it lets you then keep your guaranteed income at a higher level. You don't have to take the tax-free cash, of course. I'm just saying that's an extra option with that sort of AVC.
Okay.
It's good. There's some good feedback on BDCU there, Ian.
There
It's
is.
been a lifesaver.
Yes,
Flexible
there is.
to use, easy app.
That's lovely. I'm really,
You've got
really
some
glad that.
fans there.
Thank you. I've just put into for people that aren't part of the credit union, just how to join, and have a look at that. It would be great if we have more. The more people we have saving through this, the more people in the community we can help with loans. I think we should wrap up there, Martin. And Martin and Richard, if you want to stay on for a moment afterwards as well, but I think we can wrap up there.
Hey, I've put the feedback and don't forget that helpline number. Any other queries, do give us a ring. Have a look on our website at moneyhelper.org.uk for various other contact methods.
And
Thank you
we'll
for
be
coming.
sending the recording.
Thank you very much,
and
everyone.
Slides out. Okay.
Fantastic. All right. Bye, everyone.
Bye bye now.
Bye.